Thanks for tuning in for another episode of Ask Spurrell CPA. Today we're talking about the Spurrell CPA financial planning process, and here to help me is Tyson here again.
Hello.
Thanks, Tyson, for coming aboard again. So, what sort of project have you been working on lately?
Just a few year ends and a lot of financial plans.
Yeah, let's keeps the wheel rolling. So, the quote that we came up with for the planning process it's an Abraham Lincoln quote, and he says, "Give me 6 hours to chop down a tree, and I'll spend the first 4 sharpening the axe." It really talks about how the preparation is key in any project. So, and the statistic that comes to mind is, it's the second most common reason why businesses go out of business is they run out of cash.
Yeah.
And they generally just don't have that plan. The story we get is business owners, they're struggling, they're paying way too much money on tax, or they have a business strategy that is completely incongruent with their personal finances. So, for example, they want to hire on a new staff in the business, but that would mean that they have to cut their salary and they won't be able to pay their personal mortgage.
Right.
We have a problem. So although it might make sense for the business, it's not going to make sense for the overall entrepreneur. So what do you think the questions that these entrepreneurs should be asking, Tyson?
First would be, what formal written plans do you issue?
So the formal written plans that we issue here are, number one, we issue a financial plan. And that financial plan is based on the business owner's personal circumstances. So what are the prudent financial decisions that business owner has to make, and what's the tax strategy that we're going to use for this business owner. The second one is a business plan.
What items are considered in the financial plan?
Yeah, so it's very much about their personal, basically their personal financial situation. So we start right off with their objectives. So we need to know what's important for that business owner. What are they trying to accomplish? A business owner who's trying to purchase a new business is completely different than one who's trying to sell their business. And that's kind of the opposite end of the spectrum. But some people have very unique financial goals. They're trying to put the kids through education. They're trying to pay for a wedding. It can be everything under the sun. They're buying a new house. They're downsizing their life. So we need to understand what are the goals. Then what we really look through is what's the personal balance sheet of that business owner. So what are the assets and what are the liabilities that they have personally? We're going to see the assets and liabilities for the corporation on the corporate financial statements, but that personal balance sheet is going to matter just as much. And what does it actually cost for them to run their lives, so to speak? What do they actually need from this business every month that they can live comfortably?
Right. Hey, what is usually the immediate payoff for the client when you complete the financial plan?
So the financial plan, normally almost every business benefits from an effective, we call it a remuneration strategy. So how we're going to pay them, what mixture of salary and dividends, and even the smallest businesses, if they have an effective plan for the mixture in salary and dividends that's going to be paid to the owners or the family of the owners, that's going to have an immediate payback. $5,000, $10,000, $15,000 is not unusual even for very small businesses. So sometimes the bigger businesses, there's even more that we can do, but even for the smallest of businesses, just that effective mixture of salary and dividends is really going to save them a lot of money right up front, right from day one.
Right. Hey, how does tax planning and financial planning differ in the real world than what is taught in the CPA program?
So I really think it comes down to, like, when you write the tests on the CPA program, they give you, case studies, and they're 5 well-written pages of everything you need to know about the client. And that never happens in real life. The client never comes in with 5 well-written pages of everything that you need to know. It's your job as a CPA to have a process to peel away the layers of the onion until you get to what variables are actually necessary and significant in this plan.
Right. Hey, what are the Spurrell and Associate plans so effective?
Well, we've been just basing the processes for years. So we don't start from scratch on every client. We started with a financial planning template. Before your time, Tyson, it was 5 pages. Like version 1.0 of the Spurrell and Associates financial plan template was 5 pages. And now the plan you've been working on lately, it's probably 30 plus pages. Yeah, so it's really significant. So we have a process in place that how we get there. So we we can do it efficiently, that it doesn't cost. It's something that the average business owner can afford, but at the same time, it's extremely comprehensive too. So it's actually covering all those variables.
Right. Why do you do the financial plan before the business plan?
Really, some business strategies that you can come up with just aren't practical on some, with some personal financial circumstances. So a business owner who has a high degree of personal debt, for example, needs a far less risky business plan. Whereas a business owner who has, a lot of personal assets that they can put into this thing and they don't need a lot of money coming back into the business, they can execute a whole host of different strategies. So we've got to make sure it makes sense that, if we're planning that the owner is not going to draw from a business, how does that look? Or if the owner needs a certain amount every month, they need $5,000 or $6,000 out of this corporation every month. We have to make sure we hit that. Whereas, if we just try to plan with a corporation in a vacuum, we could have something that's completely not practical for their personal living circumstances.
Okay. What does the business plan address that the financial plan does not?
The business plan really goes into the business metrics now. So now we have, what's actually going on in their personal life, how we're going to manage them from a tax strategy. But now this is the business strategy. So, things like, what is the pricing model, how we're going to acquire new clients, and what that acquisition of new clients is actually going to translate into a forecast. So now we're going away from the business owner's personal circumstances and tax strategy and into the business strategy. But again, it's a business strategy that's rooted in something that's realistic for that particular individual.
Okay. How many meetings does it normally take for a business owner to do both a financial and business plan?
Usually it's a 4-meeting process. Sometimes people come in super organized and it's 3, and sometimes they come in completely disorganized and it's 5, but 4 is kind of the 8 times out of 10. It's 4 meetings beginning to end. It's much simpler than people think it's going to be.
And what happens in each of those 4 meetings?
So meeting number 1 is the first meeting of the financial planning process. And really what we're drilling down to is what is their high level financial objectives in their life. So what they're trying to accomplish, things like minimize tax, accumulate liquid assets, fund retirement, things like major purchases in their life. They're trying to purchase a new house, or they're trying to acquire a business, sell a business. So starting with those, we start there. And then we drill through that business owner's personal balance sheet. What are their assets? What are the liabilities? What are their payments that they're owing every month? What are the interest rates? Who are their other advisors that we have to talk with? That's all about meeting number 1. Meeting number 2 then, after we have all those variables, we can translate that into a finished product for them. We give them a financial plan that's specifically designed for a business owner, meeting number 2. Also meeting number 2, we introduce them to our business planning process, our template. And in between meetings 2 and 3, the owner usually gets 4 hours of homework to basically input their vision for the business into our planning template. And then meeting number 3 is just about us going through that information that they've put into that business plan template, and for us to understand what their vision for the company is. And then in between meetings 3 and 4, we have the job then of putting our finishing touches on that, based on what we've seen work, what hasn't worked in the past. This is the strategy we'd recommend that's consistent with your vision, and here's the reasonable forecast based on that vision.
Okay. Once these plans are completed, how do you keep them updated? Usually
it's an annual process, so it's in conjunction with the year end. So we start the planning process starts when the client walks through the door, assuming if they're up to date on all their filings. We start with the financial plan, we continue into the business plan, and then the cycle repeats at the year end. So we do the year end, we review the year end numbers, and then after the year end numbers we've reviewed, we go through the financial plan, the business plan. We determine what's changed from last year to this year. What circumstances have changed, what goals and objectives have changed, and then we do a separate planning meeting to give them an updated financial plan and business plan based on what's changed in their lives.
Why do you think other CPAs don't employ this planning process?
I think there's a couple reasons. Number one, I think it's pricing, the way they price their services being hourly, that they really don't have the funds built in, so they're always, do we need a plan, and trying to sell plan based on it, where our planning is built into the price. It's one monthly fee plan and financial statements and tax returns. It's all included, so that the customer doesn't look at it as an adversarial upsell. We don't want to do a year end without doing a plan. The same reason why someone doesn't want to sell you a car with it doesn't have a seatbelt in it. I don't think it's the right way to go. So I think the pricing structure is a little off. It's a little prohibitive for doing that sort of work. The second reason is we've taken 7 years to build out our process for doing financial plans and doing business plans, so we can actually do them very efficiently. So we can actually get a good product to the client and not have to charge them $10,000 for a business plan. It's something that the average business owner, they can actually afford to do and update each and every year. So because we have that process in place, that it's not just efficient, but it's actually very worthwhile too. So
okay.
So I think that's what we have here for today. So thanks so much again for watching, and feel free to leave any comments below, and we'll try to address any queries you have in any upcoming videos. Thanks very much.